Good morning, traders. Today is the 11th of August 2021, and the pair we've got here is the New Zealand US dollar. In our weekly analysis, we ranked New Zealand as positive, and I was saying that we really want to be buying the New Zealand, and we've seen since Monday, price has basically been going nowhere. But while price was doing that, we had prices giving us clues, and we had the buy point on the daily chart, which is the 70.11. Let me quickly open the, not that one, let me do the daily lines so we can see the daily lines, because those daily lines represent key decision making points. And this is our pattern. Once we see a momentum, and how do you recognize momentum? I'm going to introduce you to wave of success, how we count the wave. Okay, so this is wave 1 of the wave of success methodology. That is wave 1 of wave of success. This is wave 2. We have a structure here, so we will identify those structures with blue lines. Okay, and wave 2 gave us wave 3 pullback. That is a structure. So a structural point is a higher low price point that made a higher high, or a lower high price point that made a lower low in a downtrend. So that is the wave 3 structure that made wave 4. So once we see a completed 4 waves, we expect a correction to manipulate the low of wave 3, and that is what we've done, what we've seen here. Okay, I've drawn the Fibonacci from the low of wave 1 to the high of wave 4. The retracement came to 50%, so that is good enough. Okay, so the Fibonacci can go, I will delete that, but what I want to do is to project using the wave 3 low to wave 4 high for the next phase that we should be expecting, and our target will be given to us using this method, and we should be expecting price to get to the 4-day high, which is the extension 1 of this move up. That is where we should be looking to target in the New Zealand US dollar for today. Let's lock that in. Okay, so that's basically our setup. We have the daily buy point here, which is a breakout point of the daily high. All right, yesterday day high. See, that's the buy point there. And once we break out, that is a confirmation of a trend change. We get here, there will be a correction. If we count the wave in terms of the wave structure, this will be 0, 1, this is 2, expecting 3, and we expect that 3 to end at the 161.8 retracement. So I'll pause the video, and I will start recording again once the price materializes. So it's time for us to analyze the Metatrader chart. We've done the trading view, we know what we want to do. The price is the price. Okay, but this is the daily chart. You can see we already have our trend changing pattern. Lower low, lower high, higher low, higher high, higher low, higher high, and this is a correction. Okay, 0, 1, 2, 3, 4, 5, ABC down. Okay, then we expect 0, 1. So this, we should not, I am not expecting price to go above this high with this move. We expect this price to go and make a lower high, then a higher low before the major buy begins. So today will be the beginning of a breakout. Okay, we've already seen that there, but today will actually be the beginning of a breakout. Expect a correction, maybe to retest this point, and if the price holds this buy point, this breakout point that we have yesterday high, that will be significant. Okay, so let's look at the Metatrader chart. So that is our buy. Then we have the the 1 hour chart here, which is the one we use for intraday as a major price point. Okay, so we currently have a price trap here on this 15-minute chart between the buy zone and the sell zone of the swing down, okay, and this 2 up, okay. This is a momentum high here. This is a structure. This is the structure that we are currently looking to reverse off. This one actually, okay. But we've seen this trend that I've just drawn. We have a nice test of this. So this is a valid trend line. This 3, you can see 1, 2, 3 test. But we have another one here. It's actually a shorter one. 1, 2, 3 with a wick. 4. Okay. So if price comes above this price point here, and I'm gonna get that price. This I is 70014. Okay, that is a break point. Okay, if price should come above and close above that price point, that will be a break point. We have the 3 of it above it here. Let me remove the 3 of it. Actually, we need it. If you apply the Murray principles, the key here is this black line here is the 7100. This is psychological level sitting just below the Murray level. We have the break point of the daily chart here, which is the 7011. Okay, if we come above here, what the Murray principle states is when market is below the 3 of it, it has to prove itself that it is worthy to come out from the lower trading range, because 3 of 8 all the way to this price point here, which is -2 of it, is the lower trading range. Okay, price is trading in the lower band of its trading range, and before price can come out of that trading range, it must prove itself. And the way price can prove itself is through coiling. Okay, there's something we call coiling, like this. In coiling, it's just going up and down, going up and down. Then it needs strength to bust out. So the evidence that we have picked the right trade today will be a momentum, a breakout, as in with a strong velocity out of these zones. Okay, so we need to watch out for that. Below here, ideally, you don't really want to be staying in the trade. Below this number 1 that I draw out here, and that is our risk. Stop loss. Okay, that is your risk there, because this is a pattern that we trade regularly. This is a nice corrective wave. We can draw it as well. If you want me to draw it, I'll draw it here. Okay, this is a corrective pattern followed by a W pattern, and that is the W there. You can see it clearly, even though it's skewed. Okay, and what we can see now is that is a failure. Okay, so we have our pattern. Okay, price coming I this is a lower low because there's a higher low here. Okay, so this is a confirmed pattern finished up. You see that test again with this, a higher low. So we already having our W pattern. If we break above here, this is what we're gonna have, and that is your buy. Okay, let me just move this so we can see the chart. I'll just leave that one as it is. We can easily draw it again with the price, and we can count the wave. This is what we call the alternative count. These are the structures and the momentums. Okay, this is the wave structure, the market maker trend. Forget about the moving average trend and all that. They are useful, Okay, but the most important is the market maker, the dynamic traders. They actually induce price themselves, they move price, and that is why moving average and other indicators, they are good, but they lag behind the price. But you must be able to actually identify, okay, identify the trend that the market maker is currently trading. Okay, where is the direction of the momentum? We can see there's a momentum high here, there's a momentum high, so that is the direction. As long as price did not come and do crazy below the structures, this is a structure, this is a structure, okay, you should still be looking to trade in the direction of the momentum after the correction. If you cannot get it involved here above the momentum high, you should be buying, and that momentum high corresponds with the one daily high, which is 70.11. That is why we have that number there. Okay, so we expect a breakout of this coiling. Okay, and once that happens, that will be the confirmation. The final confirmation will be this high here, the daily chart breakout, and that is a buy point on the daily chart. So slowly we are getting there. The 15 minutes has closed above this trend line, this sloping trend line, this down slope here. This is the candle that closed. Okay, that's significant. Let's see the price, the closing price. I actually like to use this for that reference. This is how you set up your chart. Your daily has to be on your right hand like this, so you can see what is going on. Okay, so the closing price is 70.008. That's good. Let me see the wave of success. Okay, we have the green here. We've crossed above 1, 2, 3, 1, 2, 3, 1, 2, 3. It's okay. Nothing is up. Nothing has been confirmed 100% yet. Only above the buy point of the daily chart. Okay, that will confirm the breakout. Everything on the intraday looks fine. The wave sequence is fine. The wave of success count is fine. We know our expectation. We know where we're going to be wrong. That's your stop loss there. A close below there is a stop. Okay. And this is good because we have this yellow WT closing above the alligator lips. That is very important for this W pattern, because otherwise if it doesn't close above it, we won't count this as a swing. And we saw two candles come and close below it, so that is good enough. And the next two candles closed above it. Okay, so this W has already formed. We just need the break above. So this now is the issue here. So this alone, and I'm going to quickly disable the drawings because I want to show us something. If you're gonna learn something of this video, I believe this is one of the most important. This on its own is a setup. You can see the opening ranges: London, Tokyo session, London session, New York session, and inside is what we call the market side. Okay, and as you can see this here, the London market side, let me enable it, change the color so we can see clearly, is in aqua. We can change it to dark blue. So when the price breaks above the opening range and the market side is below price, Okay, that is very bullish. When the price breaks below, okay, the opening range and the market side is above the price, that is bearish. And as you can see, this one, what can you call this? This market side is actually slant, so that confirms what I've been saying, that we are in a coiling session. Price is just coiling around. We are expecting a breakout. Okay, that is why the market side is flat. Once we break out, the price will leave the market side behind. If we break to the upside, the price will leave the market side below. If it breaks to the downside, the price will leave the market side above. Okay, so that is why we have all these tools. We don't just have those tools on our chart for decoration. Our buy point, our sell point are the daily highs and the daily lows of the last four bars of the daily chart. Those represent the key decision making points for us, that we cannot ignore them. We can couple them with the structural points, then we have a system. Okay, well, and that's it basically. Okay, you have to, it's like a puzzle. When you have a puzzle, you have to find the piece of the puzzle and try to fit them in the right place, knowing where each and every puzzle fits. Because if you don't put the right puzzle in the right place, you're not going to have a puzzle that looks like what you're trying to mirror. And in price behavior terms, all these tools that we've got, they represent something. Okay, even though we have extra few bits that some people might say is not necessary. Something like this. This is the, I'm sure many people know this indicator. This is the roadmap by this lady Laura T on the Forex Factory. I like to have this. This is the long term one, the weekly, the 4 hour, the daily RSI. Okay, and the trend is the colored ones. So instead of having hundreds of chart or hundreds of indicators, this is actually, I can see the state of the market. The 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour are still downtrend below 200 moving average. So it's downtrend in terms of the moving averages. But remember, I said something before. We have to look at the market maker trend, and that is developing as an uptrend. That is why you must not look at only one chart. Compare your chart, look at multiple charts, see what are the indicators that you use, what are they doing. Okay, is it confirming something, or is it diverging from your analysis? Those are the things that your indicators must do for you, and you must know what to do with them. So the strength here, this strength is the weekly strength. I don't use the daily strength. I do sometimes use the daily strength, but I believe the weekly strength is more important for me. Okay, especially on Tuesday, Wednesday. Okay, today is Wednesday, and I'm seeing this. I know that New Zealand is fairly strong, not the strongest. The card has been the one that has been strong, but we know those things can flip, especially today and tomorrow. The closing will start to happen from Wednesday evening to Thursday and Friday. What has happened on Monday and Tuesday sometimes can be quickly erased. Okay, and if you learn about how the psychology of the market, the amateurs, they are very active at the beginning of the week, and the professionals, they come in at the middle of the week and trade against the amateurs. And looking at this, you can actually start looking at the chart. We have our analysis. We expect this to be weak, and it's still weak. We expect the yen to be a little bit strong. We expect the pound to be strong. We expect the New Zealand to be strong. Dollar, we expect it to be weak. CAD, we expect it to be weak. So if I'm looking at trades to look at, I'll be jumping at these ones later on today or tomorrow, the CAD and the dollar, and also looking at the Swiss. That one has been weak, so I can pair anything that is rolling up or rolling down against the Swiss. Okay, looking at the Aussie, we are neutral on the Aussie. I think we were neutral on the, I'm not sure which other pair. I'll check that one later and probably confirm to us. So that is why you do your analysis. So you know what you're looking for. and you know where you want to be positioning yourself. You don't really want to be looking at price when you haven't analyzed you haven't done your analysis when the market is closed, because that gives me, I know what I want to do, and if what I want to do is not happening, that means I can't trade that pair. If my analysis, I have to reanalyze the market, and what I like to do is I don't like to do analysis during the market, because that will not give me what I want. I want when the market is quiet, when everything is closed, then I can project my analysis. What am I expecting over the week, not just on a day? Then that bias, you only need 1 or 2 pairs every week to fall in line with what you analyzed. And once that gives you confidence and clarity in terms of what you want to be doing. So what happened here is very important. So this was the break that we identified. Let's move this to its place. This was the break we identified with that arrow of this trend line. Price made a move and came to retest it twice. This was the first test, second test on this green candle, and we are currently above the break point that we stated, or that we identified, the center point of this W. Okay, price is not going fast, which is okay. Sometimes it happens. It has to be worked out, and that was, as you can see, we are having higher closes. This here is important. We have 3-day low here, which is a buy point itself, but the breakout point is here, 70.11. Okay, we are now above the market side. It's in there, above the Tokyo market side, which is good, and we need to close above the opening range. Okay, that will give us the final confirmation, and the break above the daily high is the breakout. So step by step, price is moving in a positive direction, which is important, and that is your expectation. Because I always say to my students, when you take a trade, your edge should give you an expectation. When I buy, what are the things I need to be looking out for? Because you want to ask yourself the question for success: what is the market condition? And as we know, this is trending. Which direction is it trending? It's trending to the upside. Do I have something that tells me the trend is changing? We do not have any structural failure. Okay, this is a mini structure that made 4. This is the major structure, 3 here. Price has not come to 3. Okay, so if I have a trend and I don't have a trend changing pattern, then I have to trade in the direction of the trend. So that takes you to the next thing. How do you want to enter that market? I explained before, there are 2 ways you can enter into an ongoing trend. It's either you buy the momentum high. A lot of people don't like buying the high. I do buy the high, but that will not be the first trade I'm taking. I'm already in profit, then I can add to my position when the momentum high is broken. Because the momentum high, according to the rule, must be bought, and momentum low, according to rule, must be sold. So if price is breaking above the momentum high, or this momentum high, which is our breakout point, I can add to my position. If this is a downtrend and price is breaking below the momentum low, I can add to my position. Okay, so all these things must come together to make sure you are having, or you are making, a high probability trading decision. So if those things that you have set out are breaking down, then you know that is the time you want to be exiting your position. You have your initial stop loss, but you can actually exit your trades sometimes if your rules are being broken and you know definitely that your rule is being broken. Okay, so price is trying to break above the opening range. So this chart now is becoming a little bit messy, so I'm gonna delete the drawings. We know the price points. You can put them there again if you want to. We've drawn the wave. We know this is wave 4 to the upside. This is the correction. That's our breakout point with the daily I1. Okay, this is the sell point here in terms of daily breakout to the downside. But what I can see on this chart is very significant. Before I do this, let's use the 400 tick chart. So that's our break point that we drew earlier. So we are above it now. Look at that candle. That is a continuation candle. Okay. Well, I want to do this. This is the 400 tick chart. So this is not a timed chart. This is the tick chart. I always like to have the tick chart on my side. Why? The better signal, okay? And one disadvantage that I always find on the trading view chart and it's not a disadvantage, but one feature that they could include is the tick chart on the MetaTrader and the trading view. That will make it a perfect them perfect applications. But anyway, 400 tick, this is every 400 ticks that come into the chart, we will have a bar. So that's basically what we've got here. And what we have is a squeeze and the MACD. This is a long-term MACD, 65, 75, 35. I normally like to use the MACD for window of opportunity. So what I mean by window of opportunity is simple. So when MACD cross above 0, people assume that is a buy, but we do not assume that because a lot of people are going to be committed because of the cross above 0 or below 0. From experience, the market maker trend, if the MACD crosses up and the market maker trend, so let's say for instance, look at this is 5 here. I haven't drawn it out, but this is 5. That's the 5 signify the end of the trend, but we don't know if the trend will change. They could just pull back and continue the trend. And the 3 signifies a momentum high, the 1 signifies a momentum high. So when the MACD crosses here, people are very bearish. They are looking to sell in all this move that we can see. Some people are selling here, some people are selling here, some people are selling here. Even here that we were buying, some people are actually looking to sell just because of this move that happened yesterday. Okay, so now window opportunity is explained. When MACD crosses down and it starts retracing and it becomes green, but it hasn't crossed above 0, you want to look at the market structure to see whether there is a nice pattern, which is our pattern here, the ABC correction pattern. If price breaks the ABC correction pattern, then you don't want to be selling that pair. That is a window of opportunity. Now, this is a window of opportunity. We are above 0, but the signal line is coming down below the MACD, and that turns the color to red. That is your window of opportunity. You need to find the ABC pattern and make sure the ABC pattern fails. Once it fails, and that is this, I can't even count how many things I've discussed this morning. You always need to have many things that you look at. Some people say it confuses you. Well, I do agree if you don't understand what you're looking for. If you don't know what you're looking for, you can be confused with a lot of tools. You really need to remember the first and foremost thing that you must look at is price before you consider any indicator. That is the mistake people make. They look at the indicator to give them buying and selling. We don't do. We use price. Indicators are things that we use in conjunction with price. Indicators are stuff that we use on our chart in conjunction with price. Okay, So that's just what I want to explain here. We have I've drawn out the wave structure. I normally draw the wave on this chart using the squeeze move. Above zero, below zero, above zero, below zero, above zero, below zero, above zero, then we have a trend. So now we are having a new swing because the squeeze has come above zero, and we will just continue to draw the swing. Okay, but inside there is our pattern. You can see ABC down, then W, but the W will not, you have to look at it. You see the lower high there that made the higher low, the lower low, lower high, higher low. That is your W pattern. Okay, so this is important. Then we have the daily chart. It's the same template. We have the daily chart. Let's look at the daily chart. Analyzing the price, we can see this is still a downtrend. We are trying to see a breakout, and what we have here is this, using the MACD. Let me squeeze this chart up. We now have a window of opportunity. Okay, this is important. New Zealand US dollar is bullish, fine, in terms of what we have here, but this can become very bearish quickly because of this we can see wave 1 followed by wave 2, and if this move fails and we start seeing a strong participation, depending on where the trend that we are trading today ends, and I'm going to explain that using Fibonacci later. This video is going to be two-part video. Okay, I'll probably end this one when we hit the 40 minutes. This is an education thing that I'm doing. I have some people that I follow for the last 14 years. Some of the videos that was done in 2007, I still have them and I still watch them. And every time I watch them, I learn something. Why? Because trading is simple but it's not easy. There's a lot of things that has to come together for you to be consistent in trading. So what I'm doing here is my way of, I don't like using that word giving back, but it's my way of actually helping people. So that one thing, it might be something that I said that will click and I will make it different. You know, I watch Giuseppe Basil. He's the one that actually explained to me how to use the move, how to use the Fibonacci retracement properly. You know, I binge on McDaddy all the time because that's my mentor in terms of price behavior. You know, David Pegler. I watch him closely. I watch how he uses the pivot point, how he using the buy zone and sell zone. All those things. I have many people. The list goes on and on and on and on. Pivot point. I follow this guy on Forex Factory, David. I don't trade pivot the way he trades it, but I learned something from following his trade. I subscribe to his trade, so whenever I comment on his trade, I go there and I read what he's talking about. You know, many people like that, and that's my own form of mentoring or being mentored by all these people, because they have a lot of resources out there that I just go there, pull the video up on weekends or when the trade I'm taking is just slow. I just switch it on. It's YouTube. Watch it, which is if it's not on YouTube, I have an access to all those things. Okay, so this year, this price point 70.41 is a very important price to us. We see this structure here. This is a lower high here, 70.42. Let me get the exact price point. Don't know which one is higher. 74.35. We have this one 74.4. So 70.44 is an important price point. 70.44. I can delete this. Seven 044. Okay, so I think I've drawn the lines. No, yeah, so there's one here and one here. That's okay. That's our breakout. That's the sell point. And we have the from this is the last recording on this part one, because we have a breakout of the opening range. We've said a lot. This part one is the one that all the meaty discussion has been. The rest is just for price to do what it wants to do now. So we now have the custom day trader alert coming up. Let me see the wave trend LSMA. So this one hasn't come out yet, which is okay. That's the buy signal from the low of the day. That is why that one appeared. All right, and yeah. So this W pattern has been confirmed. B3 crossed up. We are making a higher high. Price came to 50%. Okay. This is the first target. Okay. Second target. Extended target is the 3 daily high. Okay. If we get to this point, we can see maybe a weak sell before manipulation, then there will be covering to the downside. Okay, so this is the end of the first part of this video on the live trading day for the pair New Zealand US dollar. So I will wrap this video up now, and I'll start the next part of the video once we have the daily breakout.